The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. We are having a little bit of technical problems showing the remote desktop right now. So, Michael, can you redo that? I shut down the e-signal. Okay. All right. Hey, guys. We're going to pull back up the charts we had in just a second. How are you doing today? This is Wednesday morning in the USA and Wednesday night here in Asia. We've got a couple of reports coming out, and I'll show my screen in just a second. Producer price index at 8:30 and retail sales at 8:30. And while we get the charts back up, we've got a very good friend of mine and partner in Russia on the line here. Eddie, are you on?
Yeah, good morning, guys. Good morning, John. Good morning, listeners.
Hey, man. Where are you located right now?
You wouldn't believe it. I am in Moscow, John, and you know what? Yeah, I'm here.
Yeah, we've had a trip planned in Moscow for a while, and I thought it would be interesting, again, while we're trying to get our charts back up on TFNN, thought it'd be interesting, I mean, to kind of like boots on the ground situation. You're obviously there feeling the temperature of what's going on there. What's been your experience in kind of being able to look around and being able to kind of get the feeling of what's going on with the financial arena, because I know you're visiting some pretty large firms there. What's your take on it right now? Is there a lot of fear, a lot of unrest, a lot of anxiety? What's going on there?
Yeah, John, as you know, as we planned, we met a few leading investment boutique shops. One of them are under somewhere over a little bit under 50 billion of US dollars investment, and I met some director of and key investment manager and owner of this firm. Its name is Alpha Capital, and we just finished the meeting in like 30 minutes ago. And I'm familiar with this environment of investment climate in this country. Like a couple of years ago, just recently, actually 8 months ago, they were difficult to attract anybody's attention if you are not offering anything in range of 50% ROI on investment capital. That was actually related to them, not only like liquid investment investment strategies, which is in the market, but also investment banking strategies, are acquiring companies, investing in the roads and in the development, in the infrastructures, all kinds of products. But now, it's I can feel it, and after I talked to this gentleman, this Alpha Capital company, there's really in demand of the capital preservation investment schemes, or not schemes, but strategies. Why is that?
I think you could use the word scheme because you're talking about Russia.
Yeah, sort of. There's a way of doing it, so-called way of doing business in Russia. That says it all, So if you don't know this culture, that means you need to learn it, or you gotta take it or leave it, So, but I know that culture. I can be one of them and understand everything from the from the few words. So anyhow, just speaking about this thing. So investment climate is kind of in panic. What the big money wants right now. They do not want long-term capital investments. That means investment banking out of question. Why? Because it's not liquid, and they do not trust the situation in the economic situation in Russia. Therefore, they want to commit. They don't want to commit long-term investment projects. What they want to commit into want to commit into the liquid investment projects. That means they want to invest in markets, and they are not it's not very developed environment over here. But investment climate is in panic. Why? Again, in demand. It's from the horse's mouth, from the Alpha Capital Investment heads of it. They are happy to beat inflation. That means ruble is, you can call it devaluation, or you can call it, any way you want it. But the money is after being preserved. So they are beating the benchmark. Benchmark is minus 3.5% this year. And if they are minus 2%, they're happy. A year ago, we offered him 50 ROI a year. They say, hey, what are you kidding? Give me like 100. So that situation is kind of not very actually healthy.
I remember when we were trying to do some business there before. Like you said, if you weren't going to make them 50%, they wouldn't even talk to you. I mean, and they had a zillion ways to make 50% before, it seemed like, and yeah, it's amazing what you're saying right now, because that is abnormal from what we had experienced in the past.
That's exactly what you're saying, John. And I was surprised, and I was ready to talk about some big numbers and some factions over our strategies. I'm selling our company's technology as far as the investment algorithms and algos and so forth. But they say, hey, Edmunda, stop there. I don't need to hear. We need to preserve capital. I have only requests from my clients. And I'm talking about that company services boutique, that company services oligarchs. Oligarchs, in translation, who doesn't know, in America, they are very wealthy individuals, very wealthy individuals. So these guys no longer chasing any profit. These guys want to preserve their capital and invest according information that I heard. I think it's a good, solid way of describing our very deep personal context in this business, that Russian banking crisis is coming if they will not change really quick. They call that regional financing structures. That means they have to ignore 8 or 9 or 10%. 2 years right now, John. When I was leaving, you asked me in one of your for my appearances on your show, how much they paid. You remember it was 8.3. Now it's 9.4. 9.4% government offers on a 2 years bond on government bond. 9.4%, guys. This is good stuff. Still Russia.
Can you efficiently hedge that to where you aren't susceptible to the currency risk at all? I mean,
of course we can, John. We can hedge that with the ruble, and ruble is of course responding. If you just been without a hedge, you would lost everything to the ruble devaluation. Ruble lost in its value from in 6 months, it has been 31 ruble to the $1. Now it's 41 ruble to the dollar. So you lost probably more without a hedge. 30% of evaluation of the currency to the 9% of the 9.4% of the.
Let me ask you this. I'm going to kind of throw a theoretical question and topic out there to you, because they have thrown, even last week alone, over $4 billion into trying to support the ruble. It's not working, and
yeah, they had benchmark range 40 rubles per dollar, and they were advertising that. Typically, the country keeps itself, and actually in interventions come by surprise, and now they're advertising that means they prepare. Hey, don't short anymore because we're going to intervene. Nothing happened. 40 went and went.
I would normally not stand in the way of, like, the Japanese, devaluating their currency, the U.S. trying to, buy treasuries. I would normally not stand in the way of that, but just because of what happened recently, in the past couple of weeks with the Russian government throwing money at this thing, trying to stop it, and it not seemingly working. Let me ask you another one. I mean, that makes me, relatively bullish on that ruble to continue to go up past 40 into 50 and maybe even 60.
Yeah, we need to get some bounces, technical bounces into our strategical levels that we are developed, and then sell the crap out of it. Just give me a single opportunity. That means just bounce, please.
Right. I'm showing the daily on the ruble right now, actually on the screen, but I know you're not seeing that because why?
That's another good one. This side, TFNN, your listeners probably believe, TFNN is censored by Russian government. TFNN TV network website is censored by local operators. This is funny.
Well,
And I tried everything. I tried Chrome. I tried Firefox. I tried browser. It's so funny. We're living in it's so-called the democratic country. But that's I just discovered, John, just recently.
Yeah, I know, because we were trying to get prepared.
Censored out.
We were trying to
This
get
is not
prepared.
China, John. This is not the China. This is Russia.
I know. We were trying to get prepared for the show today, and you usually look at the screen while I'm showing things if we talk, and you're like, I can't log in. I can't get this website to come. You tried every web browser and every way to get into this. And to this show today. And
it's typically like they call that Russian joking. Yeah, there's a free country. You are the one. Blah blah blah. It's more democratic. But hey, these kind of things, it's like overhead. It's not comprehensible. We can, of course, I can do some input over analysis of the stuff. Only if you type me the symbol, and I will transfer that symbol on the signal side, and then I can, of course, input also if you want me to later on, of course.
Well, my question really is, and we're going to go to break in about a minute and a half here, and then I think we can get back into this after the break. I think everybody enjoy listening to this. Is there massive tension in those financial firms because of this alone? I mean, they've got a certain amount of money they have to kind of accumulate to run the country. A lot of that money is accumulated in the energy field area, if you will. As crude oil has gone down into the $80 barrel range recently, do you feel like crude oil is going to have almost another big whoosh down because they're just going to have to sell open market crude oil just to gather funds almost, in almost like a panic, and then we'll see that kind of V move down? Maybe is that something that they're concerned about?
I can give you my own dime on the crude oil situation in relationship to Russia. It's a little bit off the direct question that you asked me, but the Russian budget was incorporated the valuation of the oil from the $100 of the value of the oil. Yeah, and that was incorporated into the Russian budgetary sorry, English is not my first language.
Their GDP goes down.
Exactly.
And not a linear rate to crude oil, but in some type of ratio relative to crude oil price.
Correct. 15%, 2% of the GDP of the Russian revenues, the Russian government revenues, represented 2% of the were equal to the 15 points move of the oil lower than $100 per barrel. That's equivalent to the $52 billion. Okay.
We've got to go to break. Stay right there if you can, and we'll be right back with Eddie out of Russia.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Eddie, you're still with us?
Yes, I'm here, John. I'm here clearly.
Okay, great. Let's get into that. We talked about, Russian GDP, kind of a ratio of the GDP being shaved off by the price of crude oil going down, and that's a pretty, standard mathematical formula, I guess, we were talking about. But I wanted to pull up the S&Ps, and we had, Joey and I at Hong Kong this morning or last night, I can't remember what it was. We were talking about, what's some of the target areas that we can kind of pay attention to on the downside of the S&Ps. We had a profile that was very, very long. And let me just kind of back up a little bit. I had talked about opting out on longs past about 19, 15, 20. We were looking for short opportunities there whenever they were presented to us, if you remember. And
I can see, John, sorry to interrupt you. I can see chart on my S&P 500.
Okay.
I can participate if you want.
Okay, so, we were looking for short opportunities. We caught one around, 1970 area on the short side, made about 100 points on that one. And then again, around the 2000 area, this is still kind of in action. But the big inflection point is, in my opinion, around 1958. We were waiting for those targets to be hit. I haven't talked about that a lot because we were kind of away from there. But that particular area, 55 to 58, 1855 to 58, and we kind of touched that this morning. Here's a 240. I think we've reached a low this morning of 56.25. So we kind of got into that little area down there. We've rallied back just a tad, but I'm looking at this from a very long-term, pretty serious, horizontally long also band or fair auction that we were looking at, where the top of that fair auction was 58. So 55, 58 is going to be kind of a little bit of a target there on the S&Ps. Yet, still want to bring up that all the metrics are still very negative, and to be honest with you, aren't really showing any hints of going back from negative to positive. And Eddie, we've got a big, a PPI coming out in about 4 minutes here, and retail sales at the same time, and that's obviously going to affect notes. Let me just get some inflection points out of the way here. Up top, we've still got that 1880 we talked about yesterday, 1881 on the S&Ps. I know we kind of crossed the border there, but came back down below. And we always talk about, just to give you guys some information before the announcement here, we always talk about if these trades don't work, we're still short-minded. Be prepared to kind of get back in the game when they cross those borders again, and trying to eliminate the long side. So that's the situation, in my opinion, on the S&Ps. We have hit some targets here. That's the inflection point up top right now. Let's take a look at the notes real quick, Eddie.
John, may I give my 2 cents on S&P since I'm seeing the chart?
Sure, obviously.
There's, as you mentioned, there's a profile from March 6th of 2014, March 6th of 2014, old profile that been broken as a resistance. That means was a potential. There's a very short-lived profile, and then the long profile which is formed on March 11, and it stood that profile actually lower end. That means area of demand until June, until June 11. So it's a very long profile. I agree with it, and that specifically matches 1853 area, 1860, 1853, 1860. By all means, okay. By profile theory, what we're doing, even though our market breadth is still negative, even though, as you said, we entered in a short trade since 2003 of the benchmark of E-minis when it turned around on weekly, and we still need to be short. No reason here to go long. But those historic profiles, according to our theory, it should provide relative support area. Why? Because right. Even the market breaks long term, this area will be retested for the resistance. So this area is safe. We call that safe area. Even if it breaks at 1853, 1855, 1858, it will come back and retest it in order for going lower. So this area is safe. My opinion, in my understanding, this is not the place to go to chase the market on the downside. This is a place actually to looking for shorter term, some bouncing opportunities, trading at least 2 ways.
Yeah, I'd personally like to see this thing. We talked about this past couple of days. I'd like to see it, as Tom would say, build cars down here, just kind of churn around a little bit. The market breadth stay negative, and then kind of keep your finger on the short trigger, if you will. Here's the situation on the notes. We got about 10 seconds here. Notes, again, we talk about just do not try to short these notes, and I don't feel that anything that they're going to talk about today, any PPI or retail sales, might be a short-lived bounce, but I think the stage is set for this instrument. We'll be back in just a minute, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Obviously, the PPI wasn't inflationary. I'll say that. We talked about, again, right before this news came out here, retail sales and PPI, and I hope you guys are seeing the screen. We talked about 58 down to 55. A lot of times, the news is out. A lot of times, you've got some people throwing up a little bit here. Obviously, we've talked about staying on the short bandwagon here because of the metrics, and that just puts my mind at ease when those things are negative, and I want to be short. We're looking for battle points here. Those battle points, 1881, last battle point. I know that we gapped up yesterday. We climbed a little bit higher. We get below the border there, and we're down here in our long-term targets now that we really haven't talked about much. Now, remember these long-term targets. Obviously, when you got a volatile market, you're gonna have to kind of expand your level of pain or gathering area, if you will, and you're going to have to kind of trade a little bit lighter, in my opinion, and give yourself a little room. So right now we're meeting some targets, long-term targets now. We're down from the highs, probably about 160 S&Ps from the all-time highs. This has happened relatively quick, and we've got some news. And the thing that really has, been, we've talked about this a lot, actually. Here's the notes. Oh, my goodness. The notes are flying. Here's the 240 situational notes. We talked about not being short the notes, not being short the bonds, not being short the Bund. It's really probably not logical to take a trading stance any other way than that. But as these notes are climbing, it's almost amazing that, the market's scared that the Fed is going to step in and somehow not be accommodating anymore. The market, as we've talked about, the market is taking care of that for us right now. And the Fed all at the same time has always put those, we had a 300-point rally the other day because their notes said that, hey, they're still going to watch things. Well, you've almost got a win-win situation to be long these treasuries right now. And, as these are a classical hedge against the market in general. We've talked about this religiously that, markets go up, bonds go sideways, markets tick down, bonds go up. I mean, you've got a very, and Tom O'Brien's been just spot on dead right about these notes for a while here, and he's been very right about the dollar. So we want to take a look at gold and the dollar as, this thing's kind of moving around here. Dollar's been relatively strong, and we're going to take a look at gold really quick here also. But, the dollar actually met our targets as we looked at this, so-called gathering area for this. Hopefully it's a gathering area between 85.40 and 86.14.15. Well, we met our target. We talked about yesterday meeting our target on the churning motion of the dollar, hopefully building cars to move higher, so to speak. And we reached a high yesterday of 86.13. We talked about 86.14 as the target. Now we're coming off. So I wouldn't take this as a, real bearish pullback on the dollar. I'd take this as, hey, we're gathering ourselves. Okay. And, this is just the way trading action goes. I heard we have Tom on the phone here. Is that correct?
John Logan, what's happening?
Tom, how are you?
I'm doing great, man. How you doing?
That's good. You got to call the Russian censors here. Your show's not being allowed in Russia.
I think that's a beautiful thing. That's just, I thought I was hearing things, man. You get a picture of something. I just get back working out with Nico, and I have it on, of course, in the house, and I'm listening to this and saying, like, you got to be kidding me, man. So I'm jumping over. It's pretty fun, actually.
What did you do to Putin? Have you been talking about him? What happened there?
I think what always has happened is that I never liked the guy, and I think it has to do with the structure being Bob Buckham. This goes back years from the Buckham, who was the CEO of Kenros. He was explaining when Putin was first taken over how he's changing the structure, and but it's a heads up. It's really a mind blower, actually.
Yeah, I was blown away because we were trying to get ready this morning, and I love having Eddie on. He's just the Methuselah of trading, in my opinion. But he's in Moscow visiting some customers of ours, and I love to hear from the boots on the ground situation what's the feeling there? Like, how does a financial firm try to weather this situation, and what kind of box are they really in? And then he said, I can't even get the TFNN. We were like, what? So
I know.
So that was wild.
And what's interesting is that the first time that I actually looked at the Russian market was the night before last, because I said, okay, I know we have ETFs, and that's not ready to buy yet either, but I was cracking up myself when I was home working. I said to myself, let me see what this thing looks like, man. And that still has a way to go down. But, I was even looking at that context saying, this is crazy.
Yeah, we're looking at the... Go ahead.
These notes this morning, man, these notes and the bonds right to the moon. It's
oh my
pretty
God.
Amazing. Yeah.
Yeah, no, I mean, for quite a while, I was, okay, we got a lot of $1 trillion worth of debt accumulated, and, when's that going to come home to roost? But that's just not even on the radar screen anymore. And our, the notes and the dollar, they are you cannot fight what's been going on the past couple of years. And I kind of went on that bandwagon a couple of years ago because you kind of saw the writing on the wall with the notes. But the dollar situation is, I think we're going to go much higher now. And I wasn't really thinking that before, but as we broke some of these levels, we're kind of painting the tape, so to speak, on these levels all the way up and not breaking stride. There's zero technical damage that has happened. I mean, even hints of it on these notes or the dollar for, God, since I can't remember really. So
and there's no doubt, man. I mean, this morning, folks, I know John's been talking about that, but we're at 2.1 on the 10-year. This 10-year is going to go below 2. It's going to be amazing watching this thing shake out, man.
Yeah, whether it makes sense or not. I mean, that these things are going to have to be arbitraged back together at some point with the classical, what is the country's growth rate, and the 10-year. That's usually a pretty decent relationship you can count on, but there's a little bit of there's a big disconnect now. There's a bubble in these treasuries. You got to go with it until you're told differently. As a trader, you really can't, when you've got great information put in front of you and you're kind of trading on technicals and things of that nature. You cannot try to outthink these things. You just have to go with them. And I learned that a long time ago.
Yeah, there's no doubt. What's really bizarre to me, even just technically we know that's the stance, but fundamentally, it's like, hold it. The United Kingdom this morning's at 2%. France is at 1.1. Germany's at 7/8 of 1%. It's like, really? You're going to go lend money to them and the euro's going down? When you look at our rate at 2.1, that's almost saying our rate's 100% more than their rate. That's what's driving this thing. I mean, it's like, hold it. The money's going to go somewhere. But I suspect what's also driving it too, John, though, these markets want to go a lot lower, So it's going to be interesting watching this shakeout today. That is this going to basically, is people going to throw it up today and we get a bounce, because what you have, the S&P is down 20. This is the kind of action that, is really going to throw some fits in the marketplace, no doubt.
Yeah, I mean, we talked a couple of minutes ago about targets on the S&Ps. We have to kind of gauge ourselves and, relegate where we're going to pick our battles with this thing. And, 55, 58, we talked about were some downside targets. And I don't usually talk a lot about targets, as you know. I mean, I kind of let these profiles kind of regulate the trade up or down, so to speak.
Yeah.
But, you got to pay attention to some long-term targets. 55, 58, we're trading 53 right now pre-market. We will gap down. There's no question about that from yesterday's close, which is, classically speaking, I know you've done a lot of trading and I have too. I mean, in down markets, when we gap up in a down market, it usually finds sellers, and that's, if you're
right.
If you're in a defined downtrend, which I think we are now,
yes.
You want the market to gap up in the morning a lot of times because it will find people that were like, oh, God, I get to get out today instead of yesterday. And, as the market's gapping down this morning and we reach some targets, we may, I know I'm totally bucking our metrics right now, but we may see a little bit of a bounce, selling the, buy the news on the PPI and all that. There's not a lot of good news out there right now. And it's amazing how quickly that changed from all good news to no good news. But
isn't it amazing? I know
it is truly amazing. I mean, me and you've been talking about opting out on longs for a while and trying to find areas to pick battles on the short side, and that that's trading. And that's being smart. I think is not trying to buy the top of the market. But right now we're going to gap down.
What's crazy is that yesterday I'm using your scanner and I'm going through the S&P 500, right? And I'm looking, and there was only 4. I think it was 5. No, I still got the list right here. There was, I think there was. Here it is. Right, 1, 2, 3, 4, 5, 6, 7, 8, 9. There was 9 stocks out of the S&P 500 that I even could look at.
I know.
That's pretty sick.
No, it's crazy. And to be honest with you, the metrics are still market breadth, whatever you want to see it. Call it relative to profiles.
Yeah.
It's telling you, what, this may not be over, and that whole internal broad look at things has really woken me up to where, what, this is kind of for real. And when we have the breadth changing, then we can kind of rethink things a little bit. But right now, this could get a lot uglier. I mean, it really could.
Listen, you know what's so sick? Okay, so first, we had the February 5th benchmark, which is a 1730, right? The bottom line is that but you get a benchmark out there at 1350. We're at 1853. Yeah.
Wow.
Seriously.
That would hurt the dollar cost averaging crowd,
Hey, listen, when you come back from Asia too, we got to get you into Boston so you know how to say cause.
I know. I've been using your lingo there. I know I'm not saying it right.
I love it. It's perfect. It's perfect.
Wow.
Perfect.
You want to talk about gold for a second?
Yeah, I like it here, man. I like what it did this morning. You rejected lower price. Now it looks like we got an ABC structure on the way up. We're already at 83,000 contracts. Your A point on this is 1183. Your B is 1238. So 83 is 17 at $50. Your C is 22 gets you 1272. And all you have to do, get inside that 1241, and this thing will take off, man. So,
well, we had a close above that profile high that I look at on the daily at 1227. We had a close above there for the first time we've broken profiles since mid-August. And
that's nice. Okay.
Yeah, now we kind of stuck our head above there. We come back and retraced a little bit farther than I wanted to see, down below 1227. We reached 1222 yesterday or this morning or whatever.
Yep. And
now we're back above, and that, that's what I try to, get people to, kind of get a feel for, is that, sometimes, we close above, we go back and retrace, or we bounce around the inflection points. Everybody's appetite for risk is a little different. I'm looking at this now after that close above 1227 is trying to hang in there, increase my appetite for risk a little bit on the stops, and just try to let this thing unfold, build some K's, if you will, above that 1227 area. And I think we're going to launch again. I mean, that 1272 area you're talking about may be a good target.
Yeah, it's going to be, and with the big differences here between where we are here in 2007 and 2008 is that you had the S&Ps are at the highs, golds are at the highs. That's when gold went from 1,036 down to 666. The S&P, of course, went down to 666. Yeah. That's a different scenario. What's going on? This is a currency scenario. I mean, look at the dollar's down 501 ticks right now. Big expansion. That's a normal pullback of the dollar that I suspect wants to go higher, but there's a normal pullback, after the extension that we had.
No doubt.
But there's no doubt. We got to trade this paradise here. That's the bottom line. I mean, I know it's sad, folks, if you're long and strong, but get stops in, because the next year and a half is going to be a freaking disaster.
No kidding. And the yen I see has broken the areas that I was trying to kind of hang in there on the 107 area. We're trading 106.30 something right now. So that's kind of a no trade for me, probably for you right now. I just was patiently waiting for that, kind of with the dollar sympathy trade going up there. But that's a little bit farther down than what I want to hang on to it for. Well, man, we're going to break, I guess, here, and God, it's been a complete pleasure that you called in.
You're a great one. Great talking to you. And Keith, I think TFNN get the badge of honor now.
Yeah, for sure. Thanks, Tom.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. I've got the dollar up. Again, I personally feel that the dollar is just, as we talked about, going to trade within these bands for a while. We talked about this 14 area up top. We've got 85.39 down below. I fully believe that's going to probably just hold. On the other hand, as we were looking at the yen, let's take a look at the yen. This is a little bit farther down than my appetite for risk here on the daily. I was trying to bank off this long horizontal band here that's relatively thin and trying to accumulate down into 107.61. We're a little bit farther down than what I wanted to do to hold in there and try to play a battle on the long side there. But on the other hand, we have had a new profile up here on the weekly. This is a literally much stronger inflection point here, sitting at 106.14, trading 106.28 right now. We've reached a low of 106.20 in this move down. This is the weekly. We got this new weekly bar well below what our price action was. That's relatively bullish when it comes to trading the yen. But right now, I want to see some confirmations getting back into this fair auction above and crossing the border again above 107.07 to start feeling hunky-dory again about being long to end. So I'm kind of, monitoring this right now. All trades don't work out. That one from 101 up to 110 obviously worked out. But right now we're just trying to lose a little, make a lot again here. So let's pull back into the S&Ps really quick. We talked about some targets on the downside, 1855, 58 in that area. We're well below there. We're trading 49 right now. And we talked about not getting overzealous to try to pick some longs here. The long-term trend's down, trend is your friend, whatever. And we've got that market breadth still super negative. So we were looking at that more as targets than reversal areas. We're going to see how the market opens. If we start reversing and gaining some momentum, I'm still going to be looking at trying to short inflection points that are presented to us. And those inflection points that we're looking at now, we're probably going to get a new 240 profile down here somewhere. And that'll be something that hopefully we can key off of, for trading this from the short side. But right now, I mean, this is a little bit lower than what I thought it was going to go. But, hey, we've made some good points here, and I'm not going to complain about it. Let's take a look one more time at the 10-year before we go to the final seconds of our show here. I haven't even pulled up the 30-year, but I'm going to take a look at it really, really quick. My goodness, this 10-year is trading like Yahoo in 1997. Jeez. Man, that's a heck of a move for the 10-year. I'm scared to take a look at the 30-year here, but we're going to pull it up. 145. 145. I saw the 30-year go up 8 handles in one day in 2008. I think I remember the day. It was like, I want to say it was November 12th, somewhere in there, 2008. That was a big day. So right now, basically from yesterday's lows, we're up over 3 handles. So again, there's nothing to key off up here. I would not short this. It hasn't gone up. So far you need to be shorting it. I'd be looking for new information to appear. Here's our 240 and just trying to trade this thing, believe it or not, from the long side until we're told differently. Guys, you've been great today. Tom, thank you for coming on the show. Eddie, awesome perspective, as short as it was from over there in Russia. And I know you're going to be in Moscow for a couple of days, so maybe we'll get some more details while you're there. All right, guys. We'll be back tomorrow, and I'll be on Tom's show later today. So have a good day trading. We'll see you again.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.